Welcome everyone to our next weekly Stockwaves webinar. The topic that we chose to start off this week is going to be telecommunication companies. So we're going to take a look at the big players, the larger cap companies, and then move on and look at some of the smaller caps. And if you guys have any charts that we didn't touch upon that you wanted to take a look at, just let us know in the chat and we can also pull up those charts. But starting off, let's take a look at Verizon here. Verizon continues to fill out what looks very convincing as an ending diagonal structure off of the 2017 low, where I have a primary wave 4 counted as complete. So we had that initial 3-wave rise for wave 1 at intermediate degree for that diagonal structure, then this wave 2, another 3-wave structure going up into close to 1236 extension here, this red fib at 6242 for the third, which is the most common target for a third wave within a diagonal. And since then, it's been kind of range-bound and trading sideways here. So that leaves us with two options to fill out the rest of this diagonal structure. The first option is that wave 4 of the diagonal completed here. This should actually be a parenthesis for the label. So the same as 4 as that blue would be. But the wave 4 completed here at the low in January. It's a little bit awkward for the structure into that low, but works relatively well for satisfying testing the down or the lower trend line for this uptrend channel here to potentially set up the fifth, where since that low in January, we have an A wave and then a 3-wave decline to the 786 retrace as wave B. And so long as price holds above this low that was hit at the end of last month, unless it was the first of this month, I can't tell here, potentially set up for a C wave to likely reach at least the 1382 extension there at 6469, potentially slightly above there. If we are going to follow through with that path, then the move up here can be a possible wave 1 of that C wave and either an A, B, and C wave back down for a larger flat, or potentially all of the wave 2 has completed at the more recent June 10th low. So that can be again the 1 to start, to the red C wave, which would head up to 61.55 to 62.57 next as the wave 3, consolidate from there in a fourth, actually probably the 1618 based on the 200% lining up pretty well with that 1382, pull back to the 100% in the fourth, and then head up to that roughly 64.65 target in wave 5 of C. The alternative, if price is unable to see that near-term continuation higher as the wave 3 of this red C, is that we roll over again and take out the June low and fill out the excuse me, fill out the blue C wave here back to the prior lows at around 52. Sorry, I know something stuck in my throat. So back at 52 would be the target support if we do fill out a wider flat here for the fourth, shown in blue. So off the November high, A wave, B wave, 1, 2, probably would get a C of the third, and then maybe a 4 or 5 to take you down to that 52 level if we do fill out the blue C wave. All right, let's move on to AT&T now. So AT&T, obviously a much different pattern overall. Let me zoom out here and kind of show you the bigger picture first. Since the low that was hit here back in 2003, price has really not given us anything clearly impulsive to the upside in this bounce. The initial move that we saw off of that 2003 low into the 2007 high was pretty clearly only 3 waves. So under the red count, the bearish count here, that can be an A wave. Then we have that pullback into the 2008 low as a possible B wave, and then a C wave potentially complete back here in July. So that is the bearish count, and that would suggest a larger A, B, and then a C wave that still has a long ways to go to the downside, taking out the 2003 low and heading down into the teens here before completing. And this could be setting up a 1-2 start to that C wave, potentially as a diagonal structure. The bullish alternative, because of that initial 3-wave start, is limited to a diagonal, but it would be wave 1 of the diagonal into that 2007 high, wave 2 back into the 2008 low, likely an A wave of the third into the recent 2016 high, and this pullback into the December low is a B wave of that third in the larger diagonal structure, now trying to start the wave C. So if we are going to start to increase odds of that bullish potential, the blue count with a C wave up beginning, this would likely be the wave 1 of that C. And we need to see something resembling 5 waves off of the December low here, which currently we don't have anything that really can be counted as 5 waves up complete yet. So based on the overlap that we have in the structure so far, it seems like if we are going to fill out 5 up, it's going to be limited to a leading diagonal, where we have a 1-2 in place, and price is now trying to fill out the third of that diagonal. Looks like with the drop down that we had into the low at the beginning of this month, it could have completed a running flat for this B wave and now is attempting the C wave higher. Basically, I would like to at least see that 100% extension fib at 33.85 reached before wave 3 of the leading diagonal here completes and we consolidate or pull back again in this fourth, and then that needs to hold support to set up one more high as the fifth to give us a full leading diagonal up. So certainly still work cut out for this chart, but if we do fill out that 5 waves up to complete a leading diagonal, and then we get a clear 3-wave pullback as a wave 2, then that would be a really nice longer term setup to play for the 1-2 and then the third of this C wave to the upside.
If it were to drop down towards about 29.50, I'd also consider that the C wave down of a flat for a larger 1-2 and a slightly larger leading diagonal for that intermediate degree wave 1. But in most circumstances, the 29 region really should hold, and that would be the first warning sign that maybe the B wave low from December was not going to be holding.
Right. When you have a leading diagonal structure like this and a lot of overlap, non-standard impulsive structure, then you have various different interpretations. So yes, a larger leading diagonal would be possible too if it starts to deviate from that path that I had shown. Next up, let's take a look at T-Mobile. Zooming out, bigger picture here, much more impulsive looking pattern, and we can consider this potential either in red, since we held a double bottom here in 2012 compared to the low that was hit in 2010. This would be in 1-2 of a large diagonal, A, B, and then C of the third. Set up for drop is the fourth, and then that would be followed by a fifth wave to a new high from there. The alternative, counting the bottom from the 2012 low, was a standard impulse shown in blue, 1-2, 3-4, and this was the fifth wave. The more important price pattern or price action to be focusing on, I think, though, is the more recent move up since the low that we hit in 2017, which pretty clearly looks like a diagonal structure. You have the overlap in this move here that really strongly suggests the diagonal. So we can count a 1, 2, 3, 4, another situation where our third hit the 1, 2, 3, 6. Again, most common target for a third with a diagonal. Pulled back and forth, and then we saw a small overshoot above the trendline resistance as the wave 5 before reversing back down. So if this is a diagonal completing, we should continue to see weakness in price head back down to break below the B wave low here at 68.15 next, and then likely retrace the majority of the diagonal structure as at least the A wave within that red wave 4 before bouncing into B wave. There is an alternative interpretation that I can add here in red, but basically a slightly larger diagonal. Because of that overthrow above the trendline resistance, you could consider that that is where the wave 3 completed, and now this is the fourth. But we would still see further downside before the fourth completes to fill out towards the lower end of the trend channel again, back in the 67 region roughly, and then attempt a fifth higher from there. So in either case, it does look like we've put in decent top here, either as all of the completed diagonal or maybe wave 3 of a slightly larger diagonal, and set up to at least fill out the rest of this wave 4. Moving on to CenturyLink next, another very different price pattern. Zooming out, a bigger picture here. I have history back to 1972, but counting from this low here in 74, very easy to get a 1-2, then a nice strong third wave into the 1999 high, and then basically price has not exceeded that high since then. It made an attempt back here in 2007, another attempt in 2010, could even consider this high here in 2014, another attempt to exceed that high, but basically has been rejected multiple times from that level and has basically been stuck in this corrective consolidation since 1999, which has filled out a pretty decent looking A, B, and now C wave structure. The overlap and the move down from that 2010 high argues well for a diagonal structure for a C wave to the downside. And you can see here the 1-2, ABC for the third, bounce in the fourth, another ABC down for the fifth to the lower end of that trend channel. So from the price pattern, we can easily consider a significant bottom here forming with that C wave complete and some really nice positive divergence as well, accompanying the recent lows to further suggest that price has completed a move to the downside. So looking at the daily chart here, we can see the strongest point of the MACD was back here in November for the wave 3 low, and every low that we've made since then has also been accompanied by some positive divergence. So it came right down into the lower end of that trend channel, as well as the overlapping fibs that we have here right around the $10 level. We had a larger 2236 based on that super cycle 1-2 back in the 70s and 80s, as well as this 300%, and then the measured move 100% extension in relation to the A wave here within the fifth. So good fib confluence there. That price has bounced off of. What we're looking for, though, to start confirming and signaling with some confidence a larger bottom struck is basically indications of a trend change, and based on the size of this pattern to the downside, that ultimately is really going to require a move back above 1270. So getting above 1270, as well as ideally filling out a nice 5-wave structure off of the low, would be a really good indication that we've struck a longer-term bottom here, and potentially even heading back up to that prior all-time high that we saw in 99 at the 49 level. So there's some good potential here. Obviously, it's very early in the move up off of the low and giving us confirmation of a bottom in place. So don't feel like you're missing out if you're going to wait for more confirmation, but certainly one to continue to watch and keep an eye on because of that long-term potential. Next up, I have Vodafone, VOD, which has also been kind of stuck in a corrective consolidation since the high that was hit in 2000. We had that initial strong move to the downside into this low in 2002, then a pretty clear 3-wave bounce into the high here back in February of 2014. And to me, that looks reasonable as a completed ABC flat for a B wave, so that initial drop into the 2002 low being an A wave, and now starting a C wave to the downside. If that is the case, then the price structure off of that high looks pretty proportional as a three-wave move so far, so it would argue well for being wave one of an, actually I have some impulse here, but wave one of an ending diagonal. Set up for wave two bounce next. That can take price to a 618 retrace of the wave one to the downside, which would be around 29, before turning back down in the wave three. Now, if we continue to just subdivide lower without getting that bounce, and head just directly towards the 618 measured move target, then we can consider all of the C wave completing as an alternative. And the next up I have FTR. It's somewhat similar to CTL. It did make a new all-time low back here, but you have kind of, since the high here in 2000, what can count as an ABC structure to the downside. Actually counted from the top of this 2007 high, but looks like a three-wave initial decline into the 2012 low, then a corrective three-wave bounce into this 2015 high, and since then a very convincingly impulsive move to the downside as what can be a C wave. Even within the fifth wave here, we can get another 1, 2, 3, 4, and 5 waves that hasn't shown any sign of completing yet, but seems to be getting closer and closer to that potential bottom, with the final fifth wave here looking like it may be missing one more fourth and fifth. If this is a wave 1, 2, 3, we can see another 4, 5 before this puts in a bottom. So another one that seems like it is coming closer and closer to completing the decline, but has room to still continue a little bit lower before that bottom is eventually struck.